All right, welcome everybody. Today I'm going to be talking about how to trade double and triple algorithms using MBoxWave. We're going to use these semi-automated algorithmic alerts, which are a new feature, and I recently did a webinar about that. So basically, we will be alerted when to look at the screen. And for those that have missed that webinar, not sure what I'm talking about, you can go to my website. And you scroll a little down, you watch this video here. In this video, I talk about how to set these semi-automated algorithmic alerts using NinjaTrader and TradingView. This can also be done in Sierra Chart. I don't show how to do that in this video here, but I have shown how to do that in the trading room. So Sierra Chart users are well covered as well. So we're taking advantage of these semi-automated algorithmic trading alerts to be notified on double and triple algorithms because those tend to be the most powerful algorithms. I've compiled a set of simple rules that we are going to take mechanically when the conditions fulfill these three rules. We take the trade. It's mechanical. We don't have to think about it, right? We're only going to trade between 9:30 a.m. and 12 p.m. Those are the sets of rules I've set for myself and for this presentation, because I don't want to be staring at the charts all day. Even though we've got the alerts, which means we don't have to stare at the charts all day, I don't want to sit at the computer all day or run to the computer if I hear an alert. So that's how I want to trade. I want to trade, for 2.5 hours a day, right? So that's the basis of this here. Exit strategies we're going to use, either we ride out the trade or we hit our daily goal. So I've talked a lot about risk management, and there's lots of options here. Do what's most comfortable for you, but I'll go over some examples as well here. So the rules: we must have a double or triple algorithm. Must. Without it, we're not considering any trades. The previous demand or supply must exceed 100. This is because there needs, like Wyckoff said, we need to have, in order to have an effect, we need to have a cause, right? So there needs to be a buildup of supply or demand accumulation or distribution in order for the price to propel up or down. So it needs to exceed 100. If it doesn't, then we don't take the trade. Also, price needs to break the previous swing high or low. So price confirms that it's moving in our direction. So we have the double or triple algorithm, but we need to confirm that we have demand or supply, and we confirm that price is moving in our direction. Simple rules. All right, so let's get started here. I'm going to have a spreadsheet here that I'm going to show. We're going to be looking at E-mini, S&P, Dow Jones, and Nasdaq. So I'm going to be looking at the entirety of last week, starting from Monday, February 12th to Friday, February 16th, and see how this strategy will have performed. And I'll also tally up the total number of winners and losers and total trades, and we'll see how it goes. So let's move to Sierra Chart. So I'm using Sierra Chart here, but this same thing will apply for TradingView, NinjaTrader. I highlighted this box here starting from 9:30 to 12. Okay, so I'm only going to consider trades in this time window. For anybody that wants to know how I did it, I had this indicator called time range highlight in Sierra Chart. I'm sure there's something for NinjaTrader and TradingView as well. So let's get started. Market's open here, and we get our first double algo here, 57 buy and balance and pullback. We fulfilled the demand criteria, which was 475. However, at this upswing here, we did not break the previous high, right? If you want to confirm that, we look at the high here. So let's look at the high is 5,045.75. The high here is 5,045.25. So we're off by half a point. We didn't break it. We're not in the trade. This situation here, we had this double algo, Stooges and minus 63 sell imbalance. We broke the previous swing, which was here coming down, but we didn't fulfill the supply exceeding 100. So we have minus 97. It's not 100. We're living by the sword and dying by the sword, so it needs to be greater than 100. Otherwise, we're not taking the trade. It's just the way it is. Maybe somewhere it'll turn out good, and we'll miss an opportunity. But here we avoided this, not a very good trade here. Next one is right here, and this is the last one for the day. 32 buy and balance in the pullback. 324, that fulfills our exceeding demand of 100. We broke the previous swing high. So what do I mean by that? What I mean is that price we broke as the price moved up, we broke the previous swing high. And that means we are going up. All right, here. We take our risk reward, right? We can start, the stop is below the swing. That's the other rule. So the stops are going to be below or above the swing. Entrance is going to be when we break out from the previous swing high or low. And, you know, set what the risk management is going to be for you, right? If you want to write out the trade until things turn bearish, you know, we can go up here and we see that these numbers here, minus 69, minus 24, are very insignificant. Minus 98 shows a little more supply. And, you know, we'll try to write out this trade as much as we can. Now, I'm not going to go into specifics here for exactly the risk management because I talked about it before, but basically we can write out the trade. And, you know, this move is good for a while, right? You can look at for the MBox histogram. You'll see it's all buying here, buying. And we get this blue dump of selling here, twice as much as here. We got a climax of X pace. I guess I am talking about risk management. I just said I wasn't going to, but okay. We'll talk about the technical analysis here, you know. And if you're still in the trade, there's a good time to exit. You see a climax in X pace, you know, we're seeing total control of the bids, you know, and good place to exit. Here we had total control of the bids, but it was weak selling. All right, so we're trying to go for a bigger move. If you would have done, you know, risk reward 1, 2, 3, you would have been out here and would have made 27 ticks. All right, that's still all right. So we had a good trade here. All right, let's move on to the next day. So this is Monday, Tuesday. And so basically we're on the assumption that we're watching three markets, right? E-mini, S&P, Dow Jones, and Nasdaq, and I'll go over those consecutively. So we'll see that some days there are no trades, right? So this is Tuesday, February 13th. These are single algorithms, single. There's no double algorithms in this day. So we don't trade it. It doesn't mean that there were no trades. There were tradable setups here using MBoxWave, but not a tradable setup according to the strict rules, right? The strict rules, which, you know, are these. Let's move on. So Tuesday was a no trade. Wednesday. We had a triple algo here. Previous swing was 98, did not exceed 100. It's a mechanical strategy, so we didn't get into the trade, right? Then we had a double algo here. We had 206. This would not have been a great trade, but let's see if we would have triggered it. We had a high of 92.25, and this was 92.25. It needs to break 92.25 at least by one tick. So this did not trigger a trade. This double algo minus 23 needs to be minus 100. Did not trigger a trade. Then we had a double algo here. We had minus 128, but the next swing down did not break this low. Didn't trigger a trade. So according to our rules, we didn't trigger any trades for Wednesday. So 2 days in a row, no trades from the E-mini S&P. All right. Let's look at Thursday. Thursday, we had a double algo here. It did not break previous swing. No trade. Double algo here. Didn't break previous swing. No trade. Double algo here. Didn't break previous swing. No trade. It's 3 days in a row. So having no trade days isn't bad if our, you know, probability of winning is high. All right, so we start here. We'll start with this one. This one's on the border edge of it. We didn't have minus 100, so we're not going to consider it. Here we did. We had the double algo. We had the minus 121. Price broke down through it. Right here. And I guess we'll go over some sample risk reward since might as well. We place the stop on top here. Entrance is where price broke previous swing. And where do we go? Well, you know, you can go as soon as you can go when the histogram contracts. You can go until here, which is still a really good risk reward. You know, say you exited on the spike in X pace right here, okay? Or say you saw right here the MBox histogram, you know, it began to contract, right? If you got out on the contraction, you could have ridden it out unto here, okay? Different strategies, okay? Or if you were going for 1 to 3, you know, it would have been much less to gain. But I'm just showing you that indeed we went down, and you know, there's money to be squeezed out of this. There's no reason why you cannot take this trade and exit with a profit. Next trade. So we have a double algo here, 366. It fulfills, we break, and we go. So 366, it's broken here. Stop is placed there, and we go. I'm just going to draw arrow from the stop, you know, and go. Next trade. 131, double algo. Price broke, previous swing. Here, we're in for an add-on position. And we go from here to here. So, you know, again, you write out the trade until, you know, you feel you want to exit, right? And if you're still in the trade, by the time we reach here, you see that it's kind of pitiful and that, you know, the buying is not doing very strong, but there is money to be made here. So we had basically 1, 2, 3 trades on Friday, 1 trade on Monday. So let's start filling it in. So we had a win on Monday and 3 wins on the Friday. And we had no loses. So I'll just all right. So total trades is 4. Win ratio 100%. Too good to be true, right? Well, we're going to examine Dow Jones and Nasdaq now. I have been trading with this strategy and have been finding it very effective. So that's why I'm sharing it. Okay. So let's move on to the Dow. So again, let's see what do we got here. We've got double algo here, 121, price didn't break it, no trade. Double algo, minus 126, price broke it, this is a loss right here. So this is our first losing trade, and I'm going to mark it. So as price breaks here, I want to show so that's easier to see. So price breaks here, we place our stop up to here. You know, we take a loss. I know visually that's maybe a little difficult to see. But that's our loss right here. It's not much. All right, that's like you know, if we draw a line here, basically that's how much we lose. This line, red line here. All right. Next trade. Double algo 154 exceeds, it does exceed 100, and we break it. So this one is a juicer. And we can see that price never we put here. So let's look at the low. Looks like it almost touched it, but let's see. We live by the rules, die by the rules. Low, 38,760. Low, 38,760. It needed to break one tick down below this low for us to be stopped out and for us to have a losing trade here. But it didn't. So we have a winning trade here. And we write it out going from here, to however much you can squeeze or how much you can tolerate your risk toleration, right? Couple exit strategies could be, okay, this is going up. You see, histogram drops here, okay? Or you see, other areas you could exit, spike at the X pace, all right? Or if you're still in the trade, you can see that, cumulative delta becomes negative here. Okay, or you can do a risk reward. That's our stop, that's our entry. If you can write it out, you're looking at making over 10, risk reward if you can write them out, right? So the trades we've been taking, we can see that they're generally, we can write them out for a good profit, and we will absorb this loss and make huge profit here. The next, okay, so that's was a legit signal, and also this is a legit signal here. Double algo, 1,000 over 1,000, it's well way over 100. If we get in, okay, that's our point. We would have gotten in, and there's juice to squeeze, right? This would be our stop, and if you could write it out until you see the spike in the X pace here on this trade, if you add it on, or if you exited earlier on the first trade, this is a second trade, you would have got in, and then you'd see that this spike in the X pace, you could get out, right? And if you didn't get out by then, well, you would have had plenty of time because price started to range. All right, so we have one loser, which is a tiny loser, and two big winners. Right? So let's go to our spreadsheet. So here we had 2 wins, 1 loss. So what we need to notice is that all the trades I'm showing is that the wins are largely much larger than the losses, right? So the risk rewards are, really, really nice. They're, 2, 3 or more, right? So here I'm not tallying, it's got to count all the ticks and everything, but I'm showing you visually, you can see that the wins are way greater than the losses. All right. So let's move on. So that was the Monday on the Dow. Tuesday on the Dow. So Tuesday, remember Tuesday we didn't get anything in E-mini. Well, look, we got something here, and it's a nice one. Got a double algo, minus 204. Price breaks, we would have put the stop here. Price broke it here, so you would have been in here with the stop there, which is fine. And write it out to what you can. And as you can see, as it's going down, this begin to contract. Okay, so if you reach around here, you haven't exited, that's the time to exit. Or if you hit your daily goal, or your nut, or your profit, you're done for the day. That could be, even simpler if you, made your, depending on how many contracts you're trading, made your few $100s, or, if you're trading many contracts, could be in the thousands, and you're done. As you can see also here, contracts, right? So what about the next one? We got triple algo here. Okay. We got, 213, that's over 100. And let's see, does this next swing break the previous high? This was 38,429. This is 38,432. So it did. And this low is not as low as this, so would not have stopped us out. Let's confirm it. The low is 38,409. Low is 38,414. Yeah. So we would have been triggered in another trade here. It's not as a juicer, but there's no reason why you would lose on it. All right, as price broke here, we would have been in, and there's some juice to squeeze here. And by the time you get here, you'll see that the MBox has contracted. This has remained kind of weak, compared to this. There's some profit to be made here. Not as nice as this trade, but this is a win. This is not a loss because we didn't hit this stop here, and there's ample time to take some profit. So 213 Tuesday, we're going to chalk it up to 2 wins. All right, let's go to Wednesday. We see that we have double algo here, so let's go over it. It's a sell. It's a decent one. We have a buy here, but I don't think price broke here, so we'll check on that after this one. So price broke previous swing. It was greater than 100. There's juice to squeeze, right? You would have put your stop on top of the swing. You would have gotten in here, and there's juice to squeeze. You could have gotten out on this spike in X pace because that looks climactic. If you didn't get out, and you would have let the trade right out, eventually trade would have returned here. But probably what I would have paid attention to is the spike here, and I probably would have gotten out in the X space. All right, so that's a profitable trade. And now this one. This one, I don't think this one exceeded the previous swing. So let's look. High is 38394. This is 38393. Now we're off by a tick, but it needs to break it, so we're off by 2 ticks. So this is a no trade. All right, so we had a win on 214 on the Dow. All right. So we're starting to see that this is pretty good strategy. The losses are small, there's more wins, and the wins are much larger gains. Let's check Thursday. So Thursday, blah, blah. Let's look here. Any double algos. Here we had a double. Price didn't break previous swing. It's a no-go. Here we had a double. Price didn't break this swing low. No trades on 215. These are zeros. So 215, 0. Next, 216. All right, what do we got here? So we have here we got a triple algo. It didn't break. It's no trade. Here we had a triple algo on 370. We broke it. This is a questionable trade if I would have taken it anyway because it's close to the 12 o'clock cutoff. But let's be conservative. Let's say we took it and we took a loss, right? So as we broke, we would have entered at this, and as it breaks here, and we would have lost, this much. Blip. A little. How much is that? 841. About 15 points we would have lost on. But again, this is much tinier. This loss. Let's look. Again. That was a no trade. The gains, much larger gains. Okay, we've had, much larger gains, The losses are much smaller. So let's chalk it up to a loss. Anyway, would have been nice if I was able to count the ticks, but it depends on your, risk tolerance. See how much you could squeeze. All right, so we're going to take a loss. That's not a win. So total trades here, we had 5 wins and 2 losses, so we have 7. And the win ratio is, we have 5 divided by 7, 71%. Pretty good. All right, so now let's take a look at Nasdaq. All right, so here we go, Nasdaq. So Nasdaq, moves a lot more volatile, more volatility than E-mini, S&P, and Dow Jones. So we'll see how we do. So 132 had it, price broke it. We had a double Algo. This is a loss. We got in here as price broke, so we lost this much. Next, double Algo here, but it was minus 50, was not 100, keeps us out of the trade. That's a no trade. Here we had a double Algo, but I don't think price broke here. The low, let's check it. Low is 63.25. 63.25. It didn't break. It was exactly the same. It needs to be at least 1 tick below. So do you see the markets like to flirt with the exact same price level as previous swings. And we saw that, I think, on the Dow Jones as well. It happens. It happens frequently. So this is a no trade. Then we get here, we have 132, triple Algo. This is a trade. So let's draw it up. So we would have put the stop here. We would have, squeezed out some juice here. So this here, loss here, compared to what we would have made here, more than would have made up for the loss and profits. All right. And where can we exit? Well, as we get to the top, we see that we get a drop here, right? That's good enough reason to exit. If you would have kept waiting, I guess you would have gotten some out. You had gotten out sometime here or not, or you could have put 3 to 1 or something. You would have been out. You would have had a good profit. So we have a one small loss, and a good size win here. So let's go here. So we got 1 win, 1 loss. Go to Tuesday. Let's check it out. So the thing is, what the criteria of the 100 of demand supply really keeps you, it's designed to keep you out of the chop, right? So we have a double Algo here, but we had a 53 weak, right? Now, I guess if we would have gotten in, it would have been, but according to our system, this is a no trade. Here, this is a no trade. It was 71 and it didn't break. No trade. We go here, this is a double. It was less than 100 here. Price didn't break previous swing. Here, price did break the previous swing, looks like, but it was 41 weak. It's a no trade day. So the 13th, no trade day. 14th. All right, we got a triple Algo, the 179. We broke the previous. We have a trade. Right, so, try to squeeze out some juice, exit, take profit, we would never consider less than, a 1 reward. So any of these trades, it has to be no less than the stop. If that's what you were going to do, if you were going to go to 1-to-1, it cannot be less than 1-to-1, right? So I think because this one, it looks like it would have been 2-to-1 or about 2-to-1, right? Not as a monster trade as the others, but trade nonetheless. A win nonetheless. I mean, now we got this here. Double Algo, we got minus 516 over 100, over minus 100. and we broke, the price broke, and we have juice to squeeze, you know. And again, a good strategy could have been to exit at the spike. And if we revisit this, I guess we could have gone for the spike here, but that would not be a 1-to-1. So if you would have had the 1-to-1, you would have gotten it about here, I think. Anyway, this one's a bit better. Looks like we have a better risk reward. This one's also a win. And we have a double here, but price didn't break the previous swing low. So we have 2 wins here. February 14th, Valentine's Day. Let's move on. So what do we got? Yada, yada, yada. Triple algo. Could see visually that this is lower than this, so this didn't break previous swing. We're not in. Do you see, this is saving us a lot by checking if the previous swing is broken. This saves us out of trades that we shouldn't take. So even though there's triple algorithm, right, and that's a strong setup, price needs to confirm it, right? Price needs to confirm it. Here we had a triple. You could have gained a little bit, but because price broke, but it was 93. Live by the sword, die by the sword. It's no trade. So 215, 0, and a 0. And we enter last day. So last day, if we're, following just this strategy, it looks like we would have gotten in, we would have lost, would have had a losing trade here, and we would have lost. We would have gotten in around here, would have lost that much. Because we would have held on to the trade, price would have gone down here, and then we would have went up, and we would have gotten taken out here. That is being mechanical, right? Now, perhaps you would have exited this trade now, because if you combine technical analysis, perhaps you would not have gotten into this trade. But we're doing mechanical rules, right? I'm not going to make exceptions now. I'm trying to make things easy. But if you would have paid attention to this contraction in the MBox histogram, contraction in Q&O delta, you would have seen that perhaps this isn't the strongest trade. Even though it fulfilled our criteria of over minus 100 and we broke previous low, it's a loss. Let's tally it up here. So this is a 0. This is a 1. So total trades, we had 3, 4, 5. Win ratio would be 3 divided by 5, 60%. 60%. All right. So this is how this mechanical strategy worked out. Looked at E-mini S&P, Dow Jones, and Nasdaq for the entirety of the last week, following these 3 simple rules. The entries were completely mechanical, right? Did not consider, like this, we did not consider this decrease in the histogram. We only trade between 9:30 and 12 p.m. And the exit strategies we use is to write out trades or hit the daily goal. Okay, but once the trades start becoming profitable, there is no need to lose on them. That's just, at that point, that would not be very smart to take a loss after you've been in profit. So if we've had total trades for the week, we had 4 plus 7 plus 5, so that's 16. 16. And out of 16, let's count the losses. We had 1, 2, 3, 4. So 4 out of 16. So we had 12 out of 16. 12 divided by 16. So we are 75% overall profitable. overall win ratio was 75%. All right, with that kind of win ratio and this kind of strategy, there's no reason you can't churn out a profit. That's going to be the end of this presentation. I tested this strategy. I have traded it. It's been quite good. And I wanted to present a strategy that people can follow that would be easy to follow, right? And so this is a strategy that I have developed that I think that people can repeat, because trading could be difficult and not everybody is able to read the charts as well. That takes a lot of practice, but this is it's a reliable and profitable strategy. So I hope you guys enjoyed this video and try out this strategy right in the trading room, how it goes. I'd be interested to know how this works for other people. Some modifications you can do is, like, you can trade more than this 9:30 to 12. That's just the cutoff I did for myself. But you certainly could trade the afternoon. You can also, add some rules or change. There's a lot of creativity. Okay. But otherwise, I look forward to hearing how other people are doing with this strategy. And I'll catch you next time. Bye-bye.